conversation to how regulators are thinking about AI and crypto. So I'm going to welcome my friend Adrienne Harris to the stage. All right. Superintendent, welcome back.
Thank you. Thanks for having me.
We were obviously having a conversation here on AI, generative AI, and what it means. It's one of the two large secular trends, obviously, emerging technologies and how regulators tackle this. You have depth that the federal regulators don't have. The states are amazing because they cover so many different areas across different sectors within their ambit and within their regulatory perimeter. I guess maybe I'll just sort of first ask you, when you look at Washington, D.C., I'll sort of switch it. I mean, we've talked a lot about crypto, but since we were just talking about AI, what's the state of play from a state's, a major state regulator's perspective on AI regulation, and where does that sort of fit into the overall trend that we're seeing across the country?
Yeah, I think, as you noted, in New York, we like to think of ourselves as the first among equals when it comes to the states. But we've been doing a lot of work on AI over my tenure, but it's such a big thing. And I think so often people just talk about AI as if it is this one thing, it manifests this one way. And certainly, even within financial services, that's just not the case. So for us, we've really been trying to break it down into the use cases that we see among our regulated entities. So we did guidance a little over a year ago on insurance underwriting and pricing in AI. We did guidance on cybersecurity in AI. You'll hear more from the department in the coming weeks and months on areas in banking, areas in crypto and AI. But I think it was really important for us to break it down that way and then strike the right balance between principles-based and things that are more prescriptive, always with an eye toward being actionable and practical, right? These things have to be implemented at the end of the day. And I think to your point about depth and breadth, right? We oversee such a broad array of financial services at DFS, from crypto to banking, insurance, money transmission, mortgage, student lending, pharmacy benefit managers.
I did not know that one.
The pharmacy benefit managers is a new one as of a couple of years ago. But we have such expertise and such diverse talent at the department too, and that really helps us get that actionable and practical piece right.
Can I ask you, I mean, you have dramatically, I mean, during your tenure, I think your tenure has been nothing short of transformational in terms of both the size and the expertise and getting people in the building sort of to tackle those issues. Can you just, I think a lot of people, not just because of Washington just in general, but even in the private market, they're trying to figure out how do they do the same thing.
Yeah.
What was your perspective, what was your strategy when it came to sort of upskilling and increasing, frankly, the size and quality of that workforce?
Yeah, it was something that was on my mind when I first came in. It was apparent to me that we were really suffering both a technological deficit, so we've done a lot of work there, including a $60 million tech transformation. And then we really had a human capital deficit. So one of the first things I did now over 4 years ago was to say, go through and do a risk-based analysis of the department and say, where are we really lacking the number of people, the types of people we need? One of those areas was clearly crypto. There were other areas. And to really just throw everything we could at the recruiting and retention problem, from giving promotions to people in the department that hadn't had promotions in over a decade, to recruiting from the private sector, recruiting from the federal regulators, which got easier as time went on, and which is great. But we saw that success and all the work that we were doing on the cutting edge, right, begets success. So the more innovative things we were doing, the more talent wanted to come into DFS from the private sector, from international regulators. So we've, over 4 years now, hired or promoted more than 1,200 people, a few more hires than promotions. The department is over 1,400 people for the first time in its history. And again, people from the private sector, from other regulators, from other areas of the state. So it's really been a transformational effort.
I mean, it's literally a different agency.
Yeah.
So you did mention crypto in those in that spate of things that you oversee. Same question. What's the state of crypto regulation from your vantage point as the leader in New York in financial services?
Yeah, well, as this crowd likely knows, DFS has been regulating crypto since 2015 with the advent of the BIT license. We also oversee crypto companies that come in and get a limited purpose trust charter from us. The licensing process is very hard. The standards are very high. So we pride ourselves on not having licensed many of the crypto companies that are no longer around because we could see through the application process that they just didn't meet our standards. And then over the last 4 years, we've now put in place 11 pieces of regulatory guidance on top of that rule. So the rule for us was really just the beginning, but because the space moves so quickly, we wanted to add guidance on customer service expectations, on blockchain analytics for our banking institutions, on market manipulation, on stable coins. And all of that has really become the framework for what's became Genius. I think a lot of what we're seeing in the market structure drafts, there really hasn't been a bill in Congress over the last 4 years that isn't rooted in what we've done in New York, where we haven't been asked to provide technical assistance, and that's from drafters in both chambers, both sides of the aisle. I really think it's a testament to what the team has done. When I walked in over 4 years ago, there were maybe 3 people in the unit. It's not going to be enough. Now our crypto unit is 60 people. I still think it's the largest crypto regulatory unit anywhere in the world. It doesn't count our enforcement attorneys and people in our Office of General Counsel who do this work with the majority of their time. So it really has become, I think, the gold star or the gold standard for crypto regulation.
What do you see looking forward as sort of the appropriate place for New York and other regulators when it comes to crypto regulation? Where do you think the strategic advantage and insight is likely going to emerge from when it comes to the states?
Yeah, I mean, we've been very vocal about making sure that any of the federal bills don't preempt the states. But I think for us, the advantage is in the experience, right? You can't deny the value of 10 years regulating this space and a team of 60 people from, again, folks that came from federal regulators, folks that came from foreign regulators, like real crypto bros, forensic accountants, financial crimes experts, cryptographers that are all a part of this team and that have done these 11 pieces of guidance, who have been supervising in the same way we supervise our banks with full scope supervision, who've been supervising these entities, looking at patterns, looking at trends in the space. You just can't replicate that anywhere and overnight. And I think DFS, long past my time, will continue to be on the forefront as we continue to supervise these entities, identify things that are happening in the space, and make sure we're speaking to it in the regulatory framework.
So you have announced, and the department has announced that you are sort of signaling forward that you will be leaving.
Yeah, in 3 days.
In 3 days. So
3 days.
So this is part of your hopefully your.
This timing was not accidental, by the way. I wanted to make sure I got to spend time with
thank you. That's cool. Okay, well,
brother.
I appreciate it. DC FinTech Week appreciates it. Thank you so much. When you sort of look back at your tenure and you think about, I've known you since law school, and I've seen you grow. I know it's a long time, and I've seen you sort of grow, and with bouts in the academy, public service, private markets, and then back in the public service. So what are the lessons that you think your time in financial regulation? Do you think fintech and crypto firms may undervalue, and at the same time, what do you think the regulators, or at least the government, can kind of learn from what you've seen in the private side with fintech and the like?
Well, so I firmly believe my time in the private sector makes me a better regulator. Right? When companies say something is overly burdensome, I have a good feel for that, having been a GC of a venture-backed company that we eventually took public, having been a lawyer at a big law firm, right? So I have a good feel for when that's true and when it's less true. For negotiating enforcement actions, I've been on both sides of that, right? Implementing regulations. So I think it makes me a better regulator. I think it's so interesting in the crypto space. My counsel to a lot of our regulated entities There's a lot of, shall we say, energy in the space now,
No.
which is wonderful. I think we've always been of the mindset that this is important innovation that's happening. We want it to happen safely, but we think it is productive innovation writ large. But I counsel people, be good winners, right? The pendulum, the regulatory pendulum, especially in DC, swings hard and fast. Right, so be mindful of that in this moment, because there is a future coming that will probably look a little bit different. I think that goes back to, though, the advantages of the states, where we're a little steadier in that way. And for me, I think one of the lessons that's come out of this, and really my goal for my tenure, was I've always sort of believed that ideology and financial regulation were not a good mix. And that you want the financial services sector to work well, because everything else in the economy depends on a financial services sector that functions well. And so I came into DFS saying you can protect consumers and markets and be good for business at the same time, and that the financial capital of the world is the place to prove that out as a financial regulator. I think we've done a pretty good job of that. Certainly always room for improvement. But that is my hope for both private sector participants and policymakers and regulators, is that we continue to think about those objectives not as competing objectives, but as complementary ones.
Well, we have had many conversations about that.
Yes.
And I agree, and it's almost you've taught as well, and
yes.
You sort of tell your students, even when in the financial reg courses, well, there may not be a right answer, but some answers are clearly better than others.
Yes.
And having a little bit of humility at the same time of knowing that nobody has a monopoly on good or bad answers will get you a very long way in terms of sound financial policymaking. I've really admired about that. Just because I do also have some of my students from my class that I told to attend
I love
this
talking
session.
to your students.
They are very smart.
It's great to find out what kind of professor you are.
Smart kids.
Yeah.
Yeah, and I think, again, we did have Karen Kimbrough, the chief economist from LinkedIn earlier, also talking about sort of the overall sort of job market and what are the skills that are in demand. I mean, from a financial regulator working on cutting edge issues, who also has to talk to, the AWSs of the world, just as you also have to talk to the, in terms of upskilling your technology stack and at the same time getting the right people. I mean, what are the attributes do you think a 21st century regulator is going to have in order to be effective? Yeah,
I mean, I think you hit on it, right? There are so few good answers, or certainly no best answers. Often it is the least bad answer that you're trying to get to. By the time something comes up to my desk, right, it's you don't often have complete information. So I think those people who can scenario plan, who can problem solve, who can get comfortable being uncomfortable. I think it's really less about technical skills, although those are really important. And I like to see talent that has what I call a jurisdictional hook. So I, like you, was mostly a derivatives lawyer once upon a time, and then was able to take that learning, that problem-solving ability that I developed in that space and broaden it out to other parts of financial regulation. But when I see either on my senior staff or young people that are coming through and just starting their careers, for me it is, are you resourceful? Are you inventive? Can you take initiative? Are you comfortable, if you don't have all the data you need to make a decision, still making a recommendation, right? It's almost a little like law school exams.
Yeah, well,
right?
No. I mean, but even there, you're getting to the experimentation, and I still have sort of thoughts on sandboxes and like, but Paul Atkins will be coming a little bit later. This question I asked Travis Hill, I want to ask you as well. In a world of incomplete information, the only thing that a regulator can kind of do is experiment. Mm-hmm. But the challenge, I mean, experimentation in financial, I mean, that's not really how people think about it. But there's a risk in not doing anything.
Yes, absolutely.
Which is a little bit different, where people would just look at the risk side more or less being put on action. Now there's a risk of inaction. Yeah. But being a regulator is pretty tough. You get blamed when things go poorly, and no one ever gives you credit when things go well, right? But yet you still have to move your agency forward. How do you tackle that paradox?
Yeah, I mean, one thing that we really try to do, is we use all of our regulatory tools. So I think there's a tendency to think that the rule writing is the end when we think of it as the beginning, right? That's why we use guidance, that's why we use FAQs, that's why we do webinars to teach our regulated entities about how to comply, right? It comes back to actionable and practical. So I think for us, and then of course there's enforcement, which really should be a last resort, and that's how we view it, right? I don't run a shop that regulates by enforcement. So using all of our regulatory tools is one way to do it. And then the engagement piece, and people pay so much lip service to engaging your stakeholders and talking with your stakeholders. But for us, there's nothing that the team does. Every time we put together a project plan on a new reg, a piece of guidance, something we want to put out into the world, where that project plan does not lay out who we want to talk to, when, right, and builds in time for iterative cycles on a piece of guidance. People do it with rules because the law requires us to do it in the rulemaking process, but we do it with guidance, we do it with FAQs, we do it with all of the tools that we leverage. We do it informally with our companies and through roundtables. But I think really baking in that feedback, again, people pay lip service to that engagement and holding events and all of that, but when our stakeholders can see their commentary, their thoughts from formal and informal conversations embedded in the regulatory product, I think that makes a big difference in terms of credibility, transparency, and ultimately effectiveness.
In that toolbox, are there any things that you found to be, I almost think that we're going to be back at the beginning. Once here in Washington, we had a conversation on regulatory sandboxes. Then somehow that got kind of aligned from everybody, because some people said it's too hard to get into the sandbox, and then other people said you shouldn't be experimenting at all. And so now regulators across government, and you're seeing that here in Washington, but also in many different state initiatives, are sort of developing new kinds of pilots to sort of get information as much as anything else. Like, what are the best tools that you found to get you to where you need to be policy-wise?
Yeah, I mean, we have a program called DFS Exchange, where companies can come in and just talk to us about either their business model, if they're unlicensed or a new company, or a new product if they're already a licensee. We haven't done a formal sandbox only because we've been able to pilot and experiment on a case-by-case basis. And it's not to say there isn't a place for the sandboxes. I think they're really great examples of them having worked well around the world. For us, we have companies come in and they go, hey, we have this new product, we're not sure it fits with your requirements, what do you think? We'll have a conversation about it, right? And we might design a pilot with the company where we cap the number of customers or the transaction volume or the aggregate amount of money that's gonna move as part of the pilot. And we found a lot of success with that. And I think a lot of the companies have too. I mean, we have things that we've then just led into the wild after a successful pilot. We've had things, frankly, where the company was telling us that our caps were too low and we were hindering innovation, and then it turned out to be a product that nobody wanted, and so it turned out that our caps weren't too low, right? And those things don't exist anymore. But I think it was a helpful proving ground for those companies as well. So I think if you're going to do a formal sandbox, right, having it well-defined, really starting with the end in mind, I think is important. I wouldn't do a sandbox for a sandbox sake, but we've been able to do it informally, I think, with great success at DFS.
Okay, so DFS is obviously based in New York. I mean, you've had lots of, I think the idea of the state providing the technical assistance on the federal level, super interesting just in and of itself. But we live in a large world, lots of different countries, lots of different regulators. Everyone's sort of re-examining, as I've said now several times, their own pipes and infrastructure. What do you think about the place of New York sort of globally? And also, nowadays, in a world where you have changing infrastructure, how does any entity, any country, any jurisdiction project influence in sort of shaping the way in which technology ultimately takes place and develops? Yeah,
I mean, I think to your point, we've been so out in front on the crypto space, in the AI space. Just yesterday, I had 3 central bank governors from Europe in the office, right? They're on their way to DC, come through New York. We also oversee 120 foreign banking institutions, multinational insurance companies. A lot of our crypto companies operate overseas. So we spend a lot of time with European, Asian, African regulators, Latin American regulators. And I think the influence comes from maybe having taken a little bit of the risk to say something about crypto, right? To say something about AI, engaging with people. We convened a roundtable a couple months ago on stablecoin reserving, because now everybody's sort of tacking toward this one-to-one reserving requirement, as ingenious, something we did 3 years ago, just saying. So everybody's sort of modeling this one-to-one reserving. Everyone wants those reserves in their home jurisdiction to cover those consumers, but that's obviously not a capital efficient model for the stablecoin issuer. So we convened about a dozen regulators from all over the world to talk about how could reserves be rebalanced? How do we get the data we need from the stablecoin issuer, from the banks where the reserves are sitting, right, to make this all work for everybody so that we can all protect our own constituents.
Seems like I don't know. I seem to have recalled similar conversations about that by Dan Tarullo and others.
Yeah, I mean, it is as simple and as complicated, right, as that transparent, open engagement, willing to admit that you don't have all the information, that you don't know, but getting to a place where everybody can see they have the same or similar objectives, and then being willing to do the hard work to get there.
All right, so thank you for working long enough to make it here. If you're going to look back, I mean, as I said, there are many things that you have done. You've been one of the most active regulators, and certainly the most transformative for your regulatory agency, I think, certainly among the states and globally. Okay, what are you most? You got to choose one.
I can't choose one.
No!
I can't choose one.
That's so
and
not.
I can see the clock down here too, so I can choose either one.
All right.
So we've gotten over $725 million in restitution back to New Yorkers. That doesn't include the $2.1 billion in Bitcoin we got back to consumers through an enforcement action against Gemini. That I'm super proud of. We made insulin free for New Yorkers, so you can get insulin for no cost sharing.
That was a DFS?
That was DFS. We made insulin free for New Yorkers. It's a huge health equity issue. We also put in place a health equity regulation where we're requiring health insurers to request demographic information from their insured, so we can start to identify more issues about utilization and health equity. The crypto stuff I'm super proud of. Building the agency I'm super proud of. We have banking development districts in New York, so we've done 7 of those in 4 years, which provide consumers with low-cost banking products and educational services. Like, I could go on and on. We posted a list of amazing things the team has done on the website with my departure announcement, but I could not be more grateful and astounded by the things that the team has accomplished over the last 4+ years.
That is super amazing. I talk to you, and I'm still surprised every single time I hear the growing list of accomplishments. I think it's best to let people sit on that information and on that list. Can we please give a big round of applause, not just for today, but for the last 4 years, to the Superintendent of New York.
Thank you.